All right, hey everyone. Mark here, Mark P Markets. Thanks for joining me for another Bitcoin day trade session. I'm going to change things up a little bit today, and I'm going to focus more on the day trade setup than I do on the major markets, because at 3 o'clock today, I'm going to be streaming on again. So that's when I'll cover that sort of thing. I want to focus more on the day trade situation and really kind of explain some things here on how this works and this how beginners should go about um, playing this game. Okay, so I want to thank you all for joining me here. Let's get this thing started. All right. So hold on, let me get my slide here. Just give me a second. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right. So I got my regulars here now. So like I said, we're going to get right into this, and we're going to go into my charts here in a moment. Let me just change something up here, okay? Because I've been fooling around with this a little bit, and here we can switch over to this view. Makes me a little bit bigger. We can even switch over to this view. Okay, cool. So I'm not going to keep this whole thing on this view. I'm just going to do this just to explain something here. So first, if you're new to the stream, welcome. What I do, I'm going to try to keep this I'm really going to try to stick to a half hour here, right? And there's not going to be a whole lot to do as far as putting on trades because of the environment. And I'm going to explain that in a moment. But again, the purpose of this video is to further explain the game plan or the steps that I take into making an effective decision when it comes to day trades. Now, a couple of things you need to know up front. Day trades are not a good way to start out in this business. It's the hardest way to make money in this game. That's the first thing you need to understand. So there are other ways to begin that are more effective. First, you get a better academic foundation, and you understand some of the important academic theories that apply to this game. Things like efficient markets hypothesis. Okay, I've talked about that a million times. And in my Discord channel, there's a special channel in there, learning resources. Bill put a whole nice little thing about that. Okay, so that's free. You should check that out. There's a link in the description. But the point is, first you start out with an academic foundation. Again, that's assuming you want to be serious about this game and not be like everyone else who just kind of like wants to fool around and they think they're just going to make some money at this, just pressing some buttons. That's most of the people. If you are serious about this, then that's where you begin, okay? Secondly, then you learn how to work with the bigger picture, okay? Bigger picture means swing trades. It means investing. It's a little easier to make money in that area, okay? But you are taking greater risks. You have to understand the risks. Now, day trades, the appealing factor is, yes, there's more action. Theoretically, you can take smaller risks per trade, but the problem is the noise is the greatest. So when you are in this game, it's like you're playing in the NFL, and you have to have a very succinct and very efficient decision-making process. I'm going to show you 3 steps here. These 3 steps come from my training program, okay, called 6 Steps to Objective Price Action Analysis. Now, you say, well, there's 6 steps in that one. How come there's only 3 here? Because less is more. Now, another thing I need to point out is, of these 3 steps, these are just to help you make an objective and quick decision, which is the kind of speed you need to play this game, but you still have to understand the context. So just because I'm showing you 3 steps doesn't mean you're going to be able to take this and, oh, I'm going to make money now, because no. You need to understand, like I said, you need to have the academic foundation and you need to have context. You can learn those things in my training program. Link in the description. Check that out. Okay. So that's the forward I wanted to mention here. Let's now get into the charts a little bit. I'm going to first, I'm not going to look at the larger time frame. We're going to go right to the smaller time frame. Okay. So, hey, everyone, it's good to see you all. Let's switch over now to that smaller time frame. Let me press this button here. Okay, cool. So here's the thing. We're going to go on this time frame. Okay. This time frame over here is the daily chart, and that's the bigger picture. I wrote my trading view analysis about that. You should have read that. I'm going to talk about this again today at 3 o'clock. All right. So over here, we're going to focus here. We're going to start here out on the 30-minute chart. Why 30-minute? Because it gives us enough data. It gives us an accurate picture, or an adequate picture, I should say, to get a sense of broader context. Okay, so in terms of steps, we're talking first step one, right? Step one is trend. Now, trend can be determined on a multitude of time frames. For the day trader, you want to get your trend basically from your 30-minute chart. That is the broader trend. Forget what the bigger picture says. The bigger picture, the daily chart, says the trend is actually generally bearish, okay? But the smaller picture does not have to agree with that. As a day trader, we're only interested in momentum, which means we have to think of the market on both sides at all times. We have to be thinking shorts, we have to be thinking longs at the same time. Okay, so we can get a bias from the market. The market can give us an idea when we zoom out a bit here and say, well, what's the short-term momentum view? What is the trend on this smaller time frame? Again, as a day trader, you're going to focus just on this. Well, based on this structure here, this is mixed. Okay, I see all these lines on my chart. We'll get to that in a moment. That's part of step two. But what we have is, first of all, this structure, right, which was what in play a few days ago. I guess that was Friday or whatever it was. That was in play, and there was a higher low in play at that point, but the higher high was never made. Okay, that is important. This is a higher high. No, it's not a higher high because it failed right after. Okay, when a higher high develops, a higher low should follow, or at least it should sustain its supports. This thing broke right away. Okay, broke this little area, and it developed into this consolidation. Okay, this consolidation is now a lower high, and you have this movement now, which is going to suck a lot of people in thinking it's a long, but really this is potentially going into another resistance area, an old support going into resistance. So that leads me into step two. Let's talk about step two. Step two is levels, okay? Support and resistance levels. Now, in my program, there's a number of ways to derive these levels. I am not going to talk about those here. You have to take the training program, but my students will be able to follow along, okay? So here's the thing. We have a level right here, and that level is likely to act as a resistance going forward intraday. All right, so that means that since my general structure, step one, is leaning toward the bearish side, and step two, I'm seeing a resistance level coming up, that means what? I should be thinking short, okay? I'm not exactly jumping in. I'm just thinking, okay, I should expect more from my shorts, and I should expect less from my longs. It doesn't mean I'm going to be stuck on shorts all day. Like, there are some long opportunities in here, right? There were. But those are high risk, those are aggressive. Obviously, they're after the fact. Now, I'm not going to sit here and say, well, look, higher low, higher high, I'm going to be looking for longs. No, you have to look at the bigger picture, okay, in the eyes of the 30-minute chart. 30-minute chart says resistance here, possible short coming, okay, possible short. So if I'm going to go long, I'm definitely not going to go long in this area here, okay? It's a place to consider shorts. If I'm going to go long, I should be looking at support levels, okay? And why all the way over here? Why not one of these levels? Because these levels are minor. These levels are minor and pretty much meaningless, okay? So they might hold on a pullback, they might not. But the thing is, this is the broader level. And since I suspect that the market is going to be generally bearish based on this structure, it is more likely that we test the lower levels. So if we're going to go for longs, I want to see extreme prices, okay? I want to see extremes because a lower low is likely. If I'm looking for longs, I really should be looking in this area here, okay? That's going to be the highest probability area if this thing fakes out and gets everyone short and squeezes, right? That's the game I have to play with that. It's a counter trend game, but that's another story. I'm not going to talk about that here. So now, a lot of people say, stick with the trend. The trend is your friend, all that other nonsense. Yes, that's a good point, and that is a true thing. But as a day trader, again, like I said, you have to think on both sides, okay? So when it comes to the trend, and we've determined here that the trend is generally bearish, I should expect more from my shorts. I should expect quick follow through from my shorts, okay? I should expect no higher highs. So higher high relative to this high, not to where we are now. So with all that being said, let's talk about step 3. Step 3 is the confirmation or the setup, right? Setup and confirmation. Now I skipped a bunch of steps from my other training program, okay? My training program has 6 steps. So we're talking about steps for my students. We're talking about steps 1, 2, and 6. I'm skipping 3, 4, and 5 for day trades because I need to be efficient as a day trader. I need to be quick. Why I can't sit there and be like, well, I'm analyzing this, I'm analyzing that. I mean, we've seen on some previous day trades that I've taken that I don't even have time to place the order properly because the setup is there, the thing is going, and I have to take action, right? So I just have to like jump in with a market order. That's normal for a day trader as long as jumping in on that market order is within the plan, meaning the setup is confirmed, everything else is in place. Okay, it justifies the entry. But normally, like for a swing trade, I set up all the orders in advance. Okay. So, but as a day trader, we don't have that luxury all the time. All right. So I pretty much outlined the 2 steps. Step 3 is waiting for what? The confirmation in a predetermined location. This is the predetermined location. If I'm going to go short, I want to see this range in here. Okay. What is that? 17,049 to 17,089. That area right there. Is that right? Yeah, that's right. So that's the area I'm looking for. In fact, I should make this chart bigger. Okay. So that's the area I'm looking for, and we'll see if we get that. We may get a signal earlier, which is possible. Since that is a potential lower high and the general trend here is bearish as we've determined, I may be open to that signal. Okay. Now let's switch over to the 5-minute chart. Now that we basically have our game plan, we've talked about steps 1, 2, and 3. Okay. So I need to see a setup develop. I would like in this area for me to take a trade. If there's no setup, then there's nothing for me to do. Keep in mind, setups appear randomly. Okay, so everyone thinks it's about just the setup, but it's about the context around the setup, right? Everyone jumps at these gimmicks, all these gimmicks, like, oh, I'm going to show you the 5 candlestick patterns that matter and all this other nonsense. Okay, I'm going to have to make those kind of videos, by the way, if I want to get followers, I've realized. So, but hopefully I'll make them with better information. And not so gimmicky. Point is this, now we're on the 5-minute chart. The 5-minute chart is where we look for the setups as a day trade. The 30-minute chart was to get basically a sense of the broader picture and develop our general game plan and expectations, okay? So now here is where we look for the setups. I'm only looking for 2 candlestick types of patterns. I'm not going to explain all those details here. You can take my training program for that. But my students know which 2. And one of them, of course, is the pin bar. So we have a bearish pin bar right there. And we have this potential mini double top situation, okay? But here's the thing. This location, like I said, it's not up in here, right? This is the location where I want to see the short, not here. So if I take this, this is going to be much more aggressive. And you know what? And I'm going to tell you why I'm not going to take it. But it's going to be much more aggressive. Although it can work, I'd prefer that we test this area because there's a better probability in this area based on the price structure. It's not an opinion, it's based on the price structure, okay? So now we're going to keep an eye on this, but here's one thing I have to say. Tomorrow, if you read my report that I wrote on TradingView, tomorrow is CPI report, okay? The CPI report is, as you should know, is a very important economic report that points to inflation or not, right? It's a measure of inflation, the consumer price index. The Federal Reserve uses that number. They look at that number. That's why it's so important in the eyes of the market, okay? Now, when you're in front of such a report like that, okay, meaning today, it's before the report, the market, the price action tends to be very erratic and very slow. In fact, it's not worth putting on any trades usually. So on a day like today, and again, that's a piece of context that most people don't realize. They just think, oh, the market's open and I'm entitled to make trades and I'm entitled to make money. No. if the bigger guys, if the general herd is staying away from the market, or the larger players are staying away, which is typical behavior, then you cannot expect much momentum. You see what I mean with this here? Like, it was kind of looking red, and now look. That's why in a situation like this, knowing that we have a major event tomorrow and on Wednesday, which is FOMC, so we have two back to back, right? That means volume is going to be lousy. And that means price action, chances are price action is going to be lousy, which means no continuation of trends, no follow through, no momentum. That is what probability points to in this environment. You need to know that as a day trader, okay? If you don't know that, you are just wasting your time. That's why I tell people this is not the best way to start. You need to have a good grasp of all these things in order to put that context together. I can sit here and tell you, and you're going to be like, yeah, that sounds good. And then when it comes to you on your own, it's all going to go out the window. Trust me, I know how it works. Okay. I've been in this game a long time. I have a lot of experience. I know where the weight is. Like, I know what factors matter, and I know what doesn't matter. I try to tell people what doesn't matter, but people still don't listen. I can't save you from yourself. Okay. So, like I said, we're waiting for this location. So either the market delivers that and gives us a setup there, or the market does not. Okay. And that's the game we're going to play. Again, I'm being extra picky today because of those reports coming out tomorrow and the next day. So now going into the report tomorrow, I believe the CPI comes out at, I think it's 10 o'clock, maybe 8:30. I don't know the exact time. You should check the economic calendar just to make sure. But the thing is, that number is going to be going into that number. You're going to see like lousy price action. Once the report is out, that's when you're going to see action. Okay. Now, the idea is you don't trade that action. It's a bad idea because it can be very erratic. You don't know how the market is going to treat that information. You may think you know, but the market may react in a way that you don't expect. Okay, that's the random nature. You have to let the market figure it out. And that was one of the points that I wrote about. So you wait until the report is out of the way, and then you evaluate the price action. So you figure you wait maybe 15, 20 minutes until after the report if you're going to look for day trades. And that same goes for if you're in the S&Ps or in the NASDAQ or whatever. Okay. So, and also, so let's talk about, while we're at it, let's talk about the FOMC. Look at my numbers dropping. People aren't interested in this. Okay. And my numbers, I mean, my YouTube numbers have been really bad. Okay. Which means I have to make some changes. So anyway, FOMC is even worse. Okay. Going into that, FOMC is at 2 o'clock. I remember the time for that. That's always the same time. 2 o'clock on Wednesday, Eastern time. So price action going into that is usually going to be lousy until the announcement comes out, and then there's the press conference at 2:30. Okay, that's where people are looking for the surprises. If there is a surprise, that's when you see the action. So it's usually best not to trade going into it. Let the reports come out, let the market figure it out, and then if there's a strong catalyst, meaning let's say both reports, let's just say the report comes out bullish, one of them, all right, that will set the tone for the day, and then you can anticipate that the trend will follow through. Now, it doesn't mean just jump in and go long and say, okay, I got this. You have to still be on top of things. You still have to measure your risk, of course, and maintain your risk control. But at least you have a better, if that tone is set, then follow through is more likely when you get a setup. Okay, that's the expectation you have to have. Speaking of that, look, we're slowly trying to work our way into that resistance, right? Okay, now this is the 5-minute. Let's switch over to the perp chart because that's really what we should be using, the perpetual futures chart for the actual trade setups. I mean, I'm just, showing an example here on this Bitstamp chart is okay, but to actually take the trade, this is really where we want to be. Okay, and you should just be using this based on whatever exchange that you use to place these type of trades if you're interested in that, or if that's something that you're doing. All right, so again, we're watching this thing do its thing. Now, another thing I'm going to mention here is the NASDAQ relationship. Again, a lot of people don't know about this, or they don't care for this, or they don't realize this, whatever, but there's the NASDAQ relationship. Okay, now this, I mean, you could use the NASDAQ, you can use the S&P. It doesn't matter. You can use one of those markets, okay, on the 5-minute chart, because there's a correlation. There's a relationship. And what you want to monitor is, what is that relationship showing us right now? It's not a one-to-one relationship. So let's just examine, let's kind of zoom out and just kind of get a similar picture here of what's going on, because it's not always the same, right? So what time is this here? This is at 9:35, right? The NASDAQ tested that low. And where are we over here at 9:35? We got, is that 8:35? I can't see the time. This is 9:35 over here. Okay. So this is the same movement right there. So I'm going to highlight both movements. Okay. So this movement here, okay, coincides with this over here, as you can see, right? The NASDAQ is a little more exaggerated, and there's no nice clean cut bullish structure. I mean, you could say, I guess you could say this is bullish structure, but I mean, look how fast it corrected that, right? Which means, that just means all this is meaningless. Okay. It's not really there. It's just nonsense. Okay. Look at Bitcoin. Bitcoin actually has a better looking structure, right, over the same time. I mean, it's similar, but Bitcoin is acting relatively strong, because look where Bitcoin is. Okay, and look where the NASDAQ is. Like, the NASDAQ is trying to hold, right? But Bitcoin is a little bit ahead of it. Can you say that Bitcoin is the leader? No, Bitcoin is not a leader. Okay, the NASDAQ is the leader. The S&P is actually the leader. So sometimes you can have a market that's acting relatively strong. In this case, Bitcoin is acting strong. So NASDAQ holds up a bit, Bitcoin holds up a little bit more. But don't think that this thing, Bitcoin just becomes the leader all of a sudden, because that would not be helpful for you to think. All right. So now, again, we have our resistance area defined here. Let me just draw it on this chart, because again, we were drawing it on another chart there. Let's just put it over here on this chart. This basically, up in this area, this is basically the area. Okay. That's basically the area we're looking for resistance to assert itself. And until we start testing that area, there's really nothing to do. All right. So you don't want to take trades just to take trades. There's no reason for that. Now, the NASDAQ can give us clues, and the NASDAQ can tell us, hey, if the NASDAQ's pushing higher, Bitcoin is likely to continue. If the NASDAQ is lousy, like it looks right now, okay, on this 5-minute chart, Bitcoin is not likely to continue. Okay, so that certainly argues against the longs for sure. We'll see how that goes. But that's, again, you can use this not to take trade ideas, but instead you use this as a filter. Okay, you basically helps you to filter out some of the noise that you will see on this chart. Does that make sense? Okay, so we have a few minutes. I'm sticking to my half hour thing here today. I'm going to be again streaming on TradingView here on YouTube in the afternoon, and that's when I'm going to cover the major markets. Okay, but this is really more of like a day trade tutorial. I need to make videos that are more in line with what people want to see based on the numbers that I've researched, because my videos no one wants to see. Okay, and there's a lot of garbage out there that gets a lot more views. All right, I'm not going to get into that rant right now. Any questions about this? So while we're waiting for something to happen here, I mean, look at this NASDAQ pulling back a bit. Okay, look at this NASDAQ. It's pulling back a bit, which again makes this move here extremely suspect. You cannot think that this is going to continue higher. People that trade in isolation, and they look at this thing in isolation, they're all going to be going long, and they're, oh, Bitcoin's bullish, blah, 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 right? Their RSI and all that other garbage that doesn't account for things like this relationship, they're going to get caught, okay? And I'm not. So what if we get the sell signal develop, in the next couple of candles? Well, again, it's not the ideal location. And I have to be selective today because of all that news that I talked about earlier. Okay, there are some days where you have to recognize that follow through is not going to be very likely. Today is one of those days. In fact, if you asked me, I would say take the day off. Don't even look at the charts today. Okay, don't even, because it's just gonna your chances of lack of follow through is very high. Use setup. Okay, cool. Yeah. So yeah, I'm just trying to, I have I'm going to be improving these streams and this and that. Okay, cool. The perp chart. Why do you use this and what is the time frame? So the perp chart that's a good question. This is a 5-minute chart. Okay. And the perp chart, as I explained, is it's the perpetual futures contract. So it's the actual futures contract that when you're placing the trade, that's what you're actually placing the trade in. Okay. I'm using the Binance chart. You should use whatever exchange that you use. So if it's BitGet, if it's Bybit, or whoever you trade your futures contract on, that's whose chart you should use. Now, those platforms, they all have the TradingView charts integrated with them, but I suggest going straight to TradingView and not using those platforms for the analysis. And the reason for that is because the stimulus and all the other garbage that they put in front of you is likely to confuse you and get you to trade for no reason, right? That's something you want to avoid. You need to minimize the amount of garbage that you're exposed to. And I know the exchanges probably won't appreciate that I say that, but hey, let's be honest here, okay? We need to be honest. And those platforms are not out to help you, especially if they're taking the other sides of those trades. Now, I don't know if the exchanges take the other sides of those trades. I have to look through the fine print, but I wouldn't be surprised. Okay. Forex dealers, of course, if you read the fine print, they take the other sides of the trades. So it's in their best interest for you to trade, not yours. Does that make sense? So all the information that they give you that you think is going to be helpful is actually there just to get you to trade, because that's how they make money. They don't care about your outcome. And I want to give you a quick example. Is the resistance 17049 based on? No, it's not, Bach. That's a good question. It's not. It's based on the structure on the 30-minute chart that I went over in the beginning of the video. That's where I got those levels from. You can use fibs, but you have to understand how to draw them properly. My students know, because I have a section on that in my training program, but I don't use them for this. It's not necessary. Okay. Less is more. You want to be efficient. You want to use the least amount of information possible to make actionable and effective decisions. Okay. While at the same time considering context. So that's a good question. I hope that answers the question. An example that I want to put out here is this. I don't know if you guys are familiar with the game Baccarat. Okay. It's a casino game. It's an old game, and it's an interesting game. If you watch people play Baccarat, the casinos where I've seen them play, the casino actually lets them chart the outcomes, right? It's like the player versus the bank or whatever, and there are these outcomes. And the casino actually supplies you with the paper and a pencil and allows you to actually chart the outcomes. Now, it's a casino game, so as we know, it's not in the best interest for you to win, right? It's not in their best interest. They want you just to gamble, right? They want you to play. So they give you the piece of paper and the pencil. If there was any advantage for you, if there was any statistical advantage, do you think they would go through that effort? They would say, no, that's not allowed, right? You can't have it. You can't be charting the outcomes. That's cheating. And then they throw you out, right? But no, instead they say, sure, have a seat. We'll give you the piece of paper. We'll give you the pencil. Chart all you want, my friend. And hopefully things work out for you. It's because it encourages the players to gamble. All right. So this works the same way. Please keep that in mind. And these people are sitting there charting these outcomes, not realizing this is random. They're charting random outcomes. So if there's a random run, they think that there's something to it. It's random. Okay. If there was any advantage to you, the casino would not let you engage in that type of behavior. Okay. So please don't be fooled. I keep trying to tell people, and people just don't want to get it. They just want to think that this industry is out to help them. Yeah, the industry is out to help you trade more so that they collect the fees, or if they're on the other side of your trades, they benefit, not you. So that's why I keep telling people, less is more. Okay. Use the least amount of information possible, especially as a day trader. So just to recap on a couple of things here. As a day trader, you need to be as efficient as possible. And it's not just 3 steps. The 3 steps help contain your behavior. That's really what they do. They focus you on certain pieces of information, and then they give you a very specific decision-making point. But the point alone is not enough. You need context. Okay, so context lets you know what side you should be leaning on, and context gives you a sense of reasonable expectations. You're not going to get that from the 3 steps. The 3 steps just say, here's the general trend, here are the support and resistance levels, and here's where you should be looking for trade ideas. Okay, but what to expect from that trade idea, and how to manage that trade idea, and how to control the risk in that trade idea will not come from the 3 steps. That really comes from context. Okay, so that's that. Okay, Hans says, we better see Wednesday. What is the best to do with things you still have in the market? Okay, well, if you're in trades, right, and you have to face these economic events, that's a good question. You have to decide, and while I'm answering that here, we don't need to see the charts anymore because there's no trades here, okay? There are no trades. So here, I'm going to switch over to this view over here. Can I do that? Let me see. Here, hold on. Let me switch over here. Why isn't it letting me do that? Okay, there we go. So I mean, we'll just keep the chart up like that because there's nothing going on here. So to answer your question, if you have positions going into these economic events, you have to decide if you're willing to take the risk. These are binary events. So either there's going to be a major reaction one way or the other. There's no way to know in advance unless you have inside information. So you have that choice, or there may be a non-event, right? Maybe nothing occurs because the information that comes out as expected. Okay, so you don't know which way it's going to go. So if you have positions going into these events, you have to decide: do you want to take the risk? Okay, you can move your stops to break even if they're profitable. If they're in the red, you can leave your stop alone. Perhaps you can get out early. Like on that euro, I had that euro trade, had to exit early, lost what, 90 pips on that stupid trade, but it was a 200 pip stop. I got out early, the price action was not behaving, and I'm not going into these economic events with that, facing a potential 200 pip stop, especially since I got stopped out of the 2 previous trades, right? I'm going to be tighter on the risk now. So those are your only choices. You have to decide if you want to take the risk and hold through those events or not. Okay. And another thing you can do is, maybe if you have multiple contracts or shares, you can take a little off the table, especially if it's green. Just reduce your risk and then either leave your stop where it is or adjust your stop. Okay. I can't tell you exactly how to make those decisions. You have to figure out what kind of risk you're willing to take. Okay. All right, you guys. So I'm going to leave you with that. I will be back on at 3 o'clock. Make sure you check me out. If you have any questions, you know where to find me. Check all the links in the description because there's a lot of great stuff there. I hope to see you in the chat room. All right. So enjoy the rest of your day, the rest of your evening. Thanks for watching.